Everybody, welcome back to Layman Loans. In this video, we're going to see what is a balance sheet. Balance sheet is something which is usually used by self-employed people only, that is people who are running their own business. So it is not pertaining for people who are into a salaried class. So if you're a regular employee and you just working in a company and getting a pay slip, then this is not a video for you. You can just skip this video and go to the next one. But if you're a self-employed person running your own business, then balance sheet is a very important document to be submitted if you have to be qualified to get any loan from a bank. So first of all, what is a balance sheet? Balance sheet is the total accounts which you're showing to the income tax department as well as to the banks with regard to what is your total inward credit as well as your expense. So what are the components of a balance sheet? So fundamentally, a balance sheet consists of your assets and liabilities. So now you have to know what is the meaning of an asset and what is a liability. Asset is something which is putting in simple terms wherein the way Robert Kiyosaki says is asset is something which will give you money. Liability is something which is going to take money from your pocket. So that's what it actually means in terms of cash flow statement. But as per your balance sheet, asset is anything which you are investing for your business and creating into something productive and useful. So there are different types of expenses what you do. So there are something called as capital expenses, operational expenses. So what is a capital expense? So assume you are trying to start a welding workshop. For that reason, you are trying to set up a space over there. So you are investing a lot on the basic infrastructure for the welding workshop. You're buying machineries for your welding workshop. All those are capital expenses. And in order to run the workshop on a day-to-day basis, you will have to pay laborers their salary, you have to pay electricity, and you have to pay rent. All those are operational expenses. So the balance sheet actually notifies the banker or the income tax department in terms of what are your expenses made, from what source you have made, and what are the different investments which have been made into the company, and in a net result, what is the total profit or loss what you have gained out of it. So assume you have a business which is making about 30,000 rupees of daily revenue. So you have to know what is the revenue. The revenue is the total amount what you're getting after selling a product or service. So you have a service or product worth 1,000 rupees. Every day you are selling 30 units of those products. Then 30 into 1,000, 30,000 rupees is your net revenue. But assume per day you will have to pay the technicians, you have to pay EB, you have to pay rent, you have to pay all the other miscellaneous expenses. Put together, after making all the payments, assume you have only 5,000 rupees left. Then 5,000 rupees is your net profit. So it's easy to do this calculation for a single transaction, or we can even do it for a single day. But how will you be able to calibrate the entire thing for the entire month or the entire year? So balance sheet is a handy tool which is made in order to calculate this entire calculation for the whole year. So you might have multiple accounts, you might have a check-in account, you might have a savings account, and all your transactions for your business might happen from different accounts. So when you have an auditor in place, he will ask you to submit the bank statement of all these different accounts, and after analyzing your total income and expense pattern, this document called balance sheet is created. If when you are applying for a loan, and if you're going to be a self-employed or a business class person, definitely the bank will expect you to submit the last 3 years IT return and balance sheets. In fact, they might even ask you for a projected balance sheet for the next year. That is, assume you have a current turnover of 2 crores and a net profit of 10 lakhs. What is going to be your likely turnover for the next year and your likely profit for the next year? Based on this information only, they are going to actually give you a loan. So assume you have a total profit of 10 lakhs per annum and you have a total loan wherein you are paying the EMI for about 7 lakhs or 8 lakhs per annum. Then they might not be interested in extending a further loan to you because you've already got enough loans which can cater to your EMI. So you might probably have to showcase them what is your expected revenue in future if you are able to take this investment from the bank loan and invest in your company, and what will be the likely outcome in your balance sheet wherein it will increase your um, total inflow of cash, like what you earn will increase because of this investment. So assume you have a welding shop with one branch, you're making about say 3 lakhs per month, and you're taking a loan in order to expand this particular unit, and you're trying to set up another 3 shops. So possibly the first 2 or 3 months it might take time for the entire business to stabilize, but from the 4th month onwards you might break even, and over a period of 6 to 8 months time you will probably be able to get a lot of profit. So all these things, rather than you just saying, all these have to be given as facts and figures in the form of a balance sheet, wherein the banker will clearly know, so okay, from this one shop you're making about 3 lakhs income per month, so with another 3 shops, if I'm able to fund this particular venture, then possibly they'll be able to make another 2 lakhs from each of the shops. So 6 lakhs will be the total projected increase in revenue out of the 3 shops. Then 6 plus 3, about 9 lakhs will be your projected revenue from the next year. So you will be comfortably able to pay EMI from next year. So this type of an understanding with reference to your overall transaction and your operations will come only through the balance sheet. So this is one of the most important records you have to have. There are very cool softwares like Tally and several other softwares used by chartered accountants in order to actually create these balance sheets. If you're a self-employed person and you're looking for a loan and you need assistance in creating a balance sheet and filing IT returns, then we are always there to help you. If you want to reach out to us in order to seek a loan reference, or in order to get an actual loan from a bank or NBFC, you can always feel free to reach out to us by filling up the form mentioned in the description below. Thank you so much for watching this video. Looking forward to connect with you all in the next one.